Good morning. This is Santiago Giraldo, CFO of Tecnoglass, here to tell you about our Q3 results. We're very excited to report today. Results came out at record levels in many different metrics. From a top line perspective, we actually saw growth in the US year over year, mainly driven by the residential segment, both single family and multifamily, which are performing very well. We saw a record gross margin, record operating margin, and record EBITDA margin. It was a great quarter all around, driven by that sequential growth that I talked about as far as revenue goes, growing also 20% from Q2 into Q3, which continues to evidence the recovery that we are undergoing, but also the structural advantages and the structural things that were put in place as a result to the automation that we put in place last year, some efficiencies, getting to gross margin of 38.8%, operating margin of 19.5%. The company had never been able to achieve that. And all while doing all of this, we also were able to drive record cash flow from operations, which year to date now stands at over $50 million for the full 9-month period. So from a P&L perspective, we were very excited. We continue to see good momentum, which is moving actually into October. So from that perspective, we couldn't have been more excited to see the rebound that we saw. From a balance sheet perspective, last week we announced a new credit facility. It's a senior secured credit facility to refinance our outstanding bonds. And that's going to do a lot for our balance sheet because it's going to extend maturities until 2025, but it's going to decrease interest expenses by about $11 million per year. So on an EPS basis, highly accretive to shareholders. And we're going to take out these bonds when they come down on premium. We have a call option that has a call option premium on top of it, which comes down in January. So the idea will be to take out those bonds and have a 5-year bank facility, which also carries a $50 million revolver, which will provide a lot of flexibility moving forward for new growth initiatives, CapEx, or whatever it may be. From a backlog perspective, we were able to grow backlog year over year. We were at $532 million last year. We are at $536 this year, which is an accomplishment on its own based on everything that is going on and how some projects are getting delayed. It's important to tell that projects are not getting canceled. I think developers are taking more time to be able to get more visibility. I think having the U.S. elections out of the way is gonna help out with that. But things are moving in the right direction. And also, it's important to note that 20% of our business is now related to single-family residential, which is not fully captured on the backlog because that business is spot in nature. So we don't have as much visibility, but that is the part of our business that is growing the most. And one part that we think is going to be a significant part of the overall revenue stream going forward. So the way that we see our backlog is underrepresenting the amount of revenues that we should invoice over the next 18 months or so. We also came out with new guidance for the full year. We have very good visibility for the rest of the year. Absent any step backs related to COVID, we already saw the performance for October, and we already see what orders are coming in the next 2 months, coupled with what we see as a continuous strength in the single family residential market. So as a result of all of that, we are estimating sequential revenue growth from Q3, very much in line with the Q4 of 2019, but with much higher margins. If we look at our margins year over year, we're gaining about 500 basis points, and we expect our gross margin to be close to 35, 36, maybe 37% for Q4. And as a result of that, we are getting to an EBITDA range between 95 to 100 million for the year, compared to 92 million last year. So it's a tremendous accomplishment in the sense that despite the top line coming down as a result of COVID, we are making more money. We're increasing EBITDA by 7% year over year. So that is it. We'll hope to have more good news for you in our next call once we report Q4. Thank you.